A car, when you finance it, there's taxes included in the car. So when you buy a car for $10,000, it's $10,000 plus taxes. What people don't realize, you get a loan for $11,300. All the taxes are considered consumed and lost at that moment. If you had to sell your car in the future privately, you could only sell pre-tax. So let's just say you bought the car for $10,000. You technically paid $11,300. That includes taxes. In the future, you privately sell it to your friend for $5,000. Okay? You indirectly, instead of just losing $5,000, you lost $6,300. And your friend has to go and pay taxes again at the Ministry of Transportation. So you indirectly get double taxed. When you finance, you enter a game of trade-in game. Like dealers can help you avoid the tax by taking your vehicle as a trade-in. So simply put, it's like, let's just say in the future now, your vehicle, you bought it, you financed it for $11,300. That's a $10,000 plus $1,300 taxes. You now bring it to a dealership. The dealership's going to milk you alive. Like they're going to make money off of you because you're trading in the car. And they use this very convenient excuse. Since you're trading in, we'll save you the taxes. So option A, you sell it to your friend for $5,000. You lose $6,300. Option B, you trade it in at the dealer. If the dealer is willing to match it, let's just say he does, the dealer takes it in for $5,000. But what really happens, the dealer's like, oh, I'll take it $5,000 plus the taxes. So in this case, your $5,000 is 1.13 is equivalent to $5,650 in the eyes of the deal. So you saved yourself $650 in taxes. Sounds great and all, until you realize dealers don't match your friend's offer. The dealer is really going to offer you $4,200. Guess what? The dealer is going to make it look like I gave you $5,000. They say, oh, you're selling it to your friend for $5,000? The dealer's like, no, look at me. I'm offering you $4,500. Let's just say that. In your eyes, it looks like you saved $5,000 in your eyes. But the dealer got it for $4,500 less. And then he could sell that in the future and make money. He doesn't take any losses. He is supposed to give you the taxes, but he uses that as a negotiations with you. Now you see how how a dealership could easily use this trade-in game to make you feel, oh, okay, you know what? I'm not losing that much if I trade in. But guess what? I got you in a spanking new car. And that spanking new car is going to cost you a lot more in depreciation. And when you trade it in again and again and again in the long span of things, it's a very long amount. The only time if you finance it is you have to drive it to zero, honestly. But sometimes like if we say the last 2 years was a good case of trading in because car values went up. But now if the market's going back to normal, it's not really, the game's over. That's the easiest thing said about that.
How are we able to help people instead of being like the other dealerships?
Well, the fact is, remember, there's multiple price points are given out. So there's a trade-in value, which is often the lowest value that a dealership could give you. There's then the whole, trade-in value, then there's the purchase value. Basically, a dealership makes you an offer. Then there's a wholesale value. Then above that, there's a retail value. And above that, there's a listing value. So I'll break down each of these for you, okay? On the top of it all is listing value. So listing value is what you see on Auto Trader. What dealers posted to the market, what my car is really worth, what I'm trying to sell the car for. So we'll go an easy case. Let's just say it's a used, a newer car, $55K car, right? They'll list it for $55,000. That's what you see on Auto Trader, plus taxes. So never mind the taxing, but yeah. So they list it for $55,000. A tier below that is retail value, which is basically what ideally the dealer would really sell it for. On average, they take a little risk there. So you could see if you're a really good negotiator, and also that gives room for negotiation too, right? So it's normally about a couple percent down. So let's just say if the listing value is $55,000, the real value that the dealer will probably sell it for is $54,000. They give themselves $1,000 negotiation. If somebody comes in and offers $500 less, why not? I'll sell it to you. That kind of stuff, right? Then it goes a little bit lower than that. Then the big jumps. These are where the big jumps are, which is wholesale value. Wholesale value is when dealers are looking for cars to market to the marketplace. So they give a pricing to each other, to wholesalers, on particular cars. If they're looking for a specific car, they'll go into the dealer market and try to buy a car from another dealership. So that's where we exist. Our offers work with the wholesale value for people, right? So I kind of beat the other two, but we'll continue on the story there. And the wholesale value, on average, it ranges from 12%, 10 to 12% of retail value. So When a dealer lists a car for $55,000, the dealer optimally is trying to make 10% to 12% of the car's valuation. And chances are he wholesale, if he had to wholesale buy it, because if he had no inventory, he would have bought that for about $48,000 to $49,000. He would have bought it for that much from another dealer. Normally, not a lot of people have access to that market. Not a lot of people have access to that market. It's only dealers do. So, that's why we offer a service, because we break it. We're like, hey, we're gonna give you better value, and then comes the real and then underneath the wholesale value, here's where normal customers get. Okay, so you get two values: an offer price value, and then trade-in value. So these two are generally the lowest or the lower of it all. So here's the difference. This is where it is. Let's just skip ahead to the trade-in value. Trade-in value is a dealership. You're giving me a car as a dealership. I'm going to price your trade-in because I'm going to convince you with the statement before, saving you taxes. Quotation, saving you taxes. Make you feel comfortable you're getting into a new car. Guess what? I'm getting your car cheaper than a wholesale. Why? Because worst case scenario comes out. If I can't sell it, I'm going to wholesale it to another dealer. So they actually offer lower than wholesale for that. So a lot of people get stiffed with an end bill, right? So, and then generally, often or not, it wins most of the time. Why? Because if you're already looking at trading in your car, you kind of already fallen out of love for your car, and you've fallen in love for a new car. So the dealer kind of gets this emotional win against you. So they could take your car and just take it. And they're huda happy because they make themselves a good margin on their deal. Then there's something called the price purchase value. So this is where, depending on how needed the dealership wants your car. If the dealer just wants your car, you're not looking to trade in your car, the dealer can make an offer on your car. This one ranges the most. It comes down to your negotiation abilities. Okay? So sometimes or not, a lot of people, for example, lease end. A lot of people don't know this. Sometimes when their car lease end is done, they just think, I'm just going to drop off my car and that's it. The dealer, in that case, the purchase price is the residual value of the car, and nobody really understands what the residual is versus the market price. Residual is always lower than market and listing price, unless you get a really bad car that depreciated because of bad story, bad maintenance, bad history, that kind of stuff. But the purchase price car could fluctuate all the way up to wholesale to down there. That's up to the customer, how they want to sell it. In our case, we're doing the purchase price, and generally often we push it towards a wholesale for people. So that's how we help people. We save people from from trade-in value, and we save people from the lease and residual value. You wouldn't believe how many people come here because they're like, yo, my lease is coming due. There's a couple damages on my car. If I bring the car back to my dealership, they're going to charge me for money. And then we look at the car, we do a valuation, we post it. It's like, oh no, wholesale covers you. You don't need to worry about that. And then we wholesale the unit for you. The vehicle gets sold. You're safe from any obligations, any risk that comes from it. Basically, you don't need to bring back the car to the dealership where they start milking you for the damages. Like, oh, your tires are done. Oh, your brakes are not done. Hey, you didn't service this. Hey, it's dirty. Hey, there's a minor dent here. You're going to have to pay to repair that. You don't need to do that when you come with us.
So really, we're giving people more value than any other dealership would.
Well, here's the case. It's dependent on the demand, right? Some dealerships, let's just say a Honda dealership who really needs Civics, sometimes they're willing to pay above wholesale to get the Civic because if they don't have no inventory, they're not selling, right? So we, on average, do better. But given an off chance, sometimes there are certain deals that can happen that will pass us. It just depends. Let's just say, for example, you have this car that you don't want, you want to get rid of. And then this dealer already has a client for it. He's like, somebody's been looking for this car. I want this car specifically. Then it becomes a negotiation room for you. Sometimes the dealer says, I don't mind wholesale because I'm already selling it retail. Retail already has a 10% margin. Hey, you know what? I wasn't going to get this 10% anyways because I couldn't find this car, but you have it. You know what? I'm okay making only 7%. Here's 3% to you. Something along those lines. So those deals do happen, but you have to be very lucky. You have to find a dealer who's willing to help you for that. Well, we're just actually trying to be more like a utility service. So we're just trying to get people, we're just trying to, okay, our dealership exists. There's a function of our dealership. And that what I believe. The function of this company that I'm trying to make here, this retail company, is the following. We exist as a gear in this whole automotive industry. We're just a function. We're a utility function. We're just going to help move assets from one person to the next person, from one business to the next business at optimal values. Where everybody wins. Because most often this industry is plagued with the following. Not a lot of people look at this industry in a really good light. When you say, I'm a car dealer, people are like, oh, I don't like you. I have to deal with you for 8 hours, and I know every second you're trying to do is trying to get money out of me. Like, I exist more as a function. You just give me the cars. I'll find the best allocation, the best optimized pricing for you in order to break your leases. You're happy, I'm happy. I just moved the asset along. So we're more of a utility. We're trying to become more of a utility service rather than just a car sales to buy and sell at the highest price. Like, it's not really functional. No matter up or down car prices, we exist on trading. We just want to move people's assets instead of holding assets on. That's the biggest thing. So I don't know how you're going to sum that up, but it's just that's what I feel for the next years. For at least the next couple years, I feel like it's a optimal time for businesses to become utility business, to help people as much as they can, because it's such a bad situation now for everyone. By becoming a utility service, we want to offer more services to them, from mechanic work to like auto sales, like do everything for them, that they could relax and just say, you know what, I could just give the car to this dealership, we'll take care of it all for you. From buying, selling, and moving you on to the next car. And I want you to know is like it's like optimized everything. Like every step of the way is transparent. Like the last 3 years, I'll say this: the technologies that's now presented to us in the automotive industry that we have as tools, it really optimizes things. It makes things pretty much more efficient than ever before. Back then, it was hectic. Like, so that's why back then they wanted even harder margins. Like, it's understandable that they wanted bigger margins back then because there was a lot more risk. Like, you hold a car, you don't know, is this car very highly demanded? Can I sell it within a month? So these dealers knew there was like, oh, wow, there's so much risk. You know what? I don't want just a 10% margin. I need a 20% margin. Or 20 is a little too much, but like 15% margins, because they're really not knowing the market, right? But right now, because now we have so many of these dealer apps, these dealer tools that's existing now, we could like slim down the margin because of the efficiencies. Like, these tools reduced our risk quite a bit. I wouldn't say not. These tools we have right now have reduced our risk quite a bit, that we're comfortable to offering more for vehicles. And indirectly, I think customers have been getting more. That's why they've been coming here, right? Like, we offer more to them because we're willing to, like, the risk has been reduced a bit more for us. And we're like, you know what? We don't need to run a 15% margin to 20% margin. Back then, I had to buy a car, pay it all up front in cash, maybe take a loan and pay an interest rate on that loan for that car, sit it in the lot, run it like 20 times, not knowing if a dealer is going to see it, not knowing if someone's going to see it. Because back then, in examples, you could only do like 2 runs a week. You go in, you put it out there, you send out, you blast it to all the dealers. You can only do that twice a week. But today, you could do it 24/7. And you'll always have you're supposed to, I think it's consistent for now, a consistent stream of buyers who are looking for these cars, because it's becoming so digitized now. Honestly, the last 2 years, so much technology has probably digitized this system. Like this sector that's actually making things more efficient than ever before. That's why car sales are peaking. And honestly, now you start seeing these advent of online car dealerships. All these guys are popping up because they're starting to realize they don't need to take as much risk anymore, so they can make a little bit less margin. But online dealerships and all that stuff, it's another story. That's another market. That's another thing completely different, and that has a lot of risk in itself.